Hello, this is Dave, and welcome to Equity Story. And sorry it's a little bit late today. God, I missed the wolf because I'm having to do a lot of not only the technical work, but look at the stories and the stories that hopefully where this is a tough market, but little areas where hopefully we can make a buck and make a little bit of money. But like we said, the main thing is to hold cash. The markets are going lower, but there are a few areas where the opportunities are coming out. Now, this is just general share advice, not personal advice. And let's get going on this. Now, the other week, I think I was really mean about Jim Cramer because I showed this video that he did, and he was talking about Bear Stearns. He said, Bear Stearns, don't sell Bear Stearns. It's a solid, one of the biggest financial institutions in the world. And then 5 days later, it went broke. Now, really, I showed you that video so you understand that, the stock markets can do really bizarre things and companies can when you think they're good, they're not so good, and we've seen it all before. We've seen that even here in Australia with a number of companies. But this guy did one thing really well. 2008, in the sell down, he said, "You know what? There's a number of companies that are getting absolutely hammered here that pay good dividends." He told his members start buying them, and if they went lower, buying them and just accumulating strong American companies that pay dividends. And in the long run, it worked out very, very well for those American buyers. Now, there is an issue there at the moment that this US dollar is a little bit high, so you've got to watch that. But if you've got certain of your funds in America and you're buying American stocks, you're looking for dividend plays, well, this could be of interest to you, this video. And after that, we might look at one or two Australian companies that have also in this sell down where good dividend plays, they've just been sold off, and possibly opportunity knocks for the long-term investor who likes dividend stocks. So let's hear what Jim has to say about American dividend plays and his experience of buying them in difficult times.
Treasury now at an astonishing high 4.3%. It's widely viewed as a sign that we're on the cusp of recession because it means the Fed's going to hit us with more rate hikes, possibly a lot more. At the same time, these rapidly rising Treasury yields put tremendous pressure on dividend stocks because they finally have competition from the fixed income market. I know it's cliche, but you know what? I got to view this as an opportunity. At this point in the cycle, you're getting a chance to buy the accidentally high yielders. I call them the AHYs. Dividend stocks have been hammered to the point where their yields are irresistible regardless of where the treasuries are. They might have more downside here, but I recommend you start buying them here and gradually building a position. Why am I so confident? Because we embraced the accidental high yielders in the late 2008 when the market was falling apart. I said you had to hold your nose and buy them. It turned out to be one of my best calls since the show began. Now I see the same thing happening, which is why we ran a screen looking for stocks down 30% or more from their highs that now yield more than 4%. There are 54 of these at the moment, up huge from just a few months ago. And tonight I want to highlight 5 that I think will work for you.
So again, I think it's important what Jim was saying. He's saying he wasn't saying buy them all now. He's saying just average into these dividend plays as they go down. Now I'm going to give you those 5 dividend plays in America. The first one is OKE. This is in the right space. It's gas, and these guys at the moment, and this is from my information in America, and please obviously check this yourself, but they're giving a 7.5% dividend. You've got Devon Energy, again in the right space, really in the energy market, giving an 8.3% dividend. You've got FRT, Federal Realty Investment Trust. These guys just giving just under 5%, 4.9. You've got Ford Motor Company giving 5%, and you've got Key, again, Key Corp, a company in the right space, giving around sort of 4.89%. So, nice sort of average. Those dividends are pretty high. Normally the Americans aren't spoiled for high dividends like we have been in Australia. But he's not saying buy them now. If you look at the charts, like for example, Key looks like it could go lower. Ford looks like it could go lower. FRT looks like it could go a little bit lower. Devon's holding up fairly well, but so maybe that's the buy now, and maybe even okay. But the important thing is he says just start accumulating, just start digging into them. If you've got that long-term approach, you could be well rewarded. And again, I think it's the same. You could look on Equity Story, our dividend plays, and the ones that Wolfie likes. And I was looking at some plays like COF. It's 11%. That's attractive, isn't it? Even where you see fixed income is going up 11%, you've got to like it. And maybe this is one you've seen a lot of these office plays being sold off. I think this one a little bit unfairly. The reason I'm saying this, I think they they rent to a lot of sort of good government government institutions. You've got Worley now that's been, sorry, oh, got the code wrong. You've got Worley that's been sold off a little bit. I think they're giving around 8%, maybe a little bit of support here. And again, I think Worley would be in the right, if you've got that long-term view with a good dividend with a company, it's in the sort of right sector in the oil and gas. And like, I'm bullish oil, I'm gas. I think, the world, you don't have to, you've seen oil get sold off recently really strongly, and you've seen Woodside get sold off. But I mean, really, with the war with Biden digging into most of the oil in the United States, I think they're going to be out of all their strategic reserves possibly in a year and a half. You've got the war in Ukraine, more issues with Russia. Oil, the long-term picture, I think, is very much in play. And again, I think Woodside, they're paying a good dividend. Look, bounced off trend. I think it was an opportunity at 30, and if you're in that, you definitely be holding it. And I'd put the same with stocks like Santos. Again, what did we see from Santos? UBS put a 920 target price on it. Again, I think it's just in the right section. They've sold part of their assets, 5%, for 1.2 or 1.4 billion. Apparently, if that deal doesn't go ahead, UBS is saying that other companies that will take those assets, they're nicely diversifying what they're doing, Santos. And, if you've got that longer term approach, I think, again, possibly an opportunity around here. AJL, a hot stock 2 weeks ago. I still think this stock is hot, right? Because, when you've got a company that's trading on a 200 or 300 million market cap, and they've got assets that could be potentially worth billions, and the UK government said, right, those assets we're going to realize those assets. You can frack now. Well, they're going to get going. They've done a raise. Of course, they're going to need the money. They've got a lot of work to do. They've got a lot of land to get fracking and get people on site, and they've done a raise. Now, I would have liked that raise, obviously, at 15 cents. They've done it at 11 cents. Opportunity, right? If you've got a few, maybe you can get in the raise, get a few more at 11 cents. Because I think the general story is intact. And often what you find when they do these raids, they'll do the raids and they'll be saying to the broker, well, we've got good things happening. We've got companies looking to do stuff with us. And I think, in brackets, maybe a good raise, not a bad raise. TLX, got, you can see the charts never lie. Look at that, breaks the trend line and the news comes out. Well, they've got issues with their product in Europe. FDA, they've got FDA approval in USA. They've got approval here in Australia for their product, their cancer product. And suddenly Europe say, hold on a second, we need more data. It's just this business. Most probably, for the long termers, this looks like it'll go lower. Maybe it's an opportunity for me. I like to buy positivity. I think if this story does work, one day it's going to be the 5-bagger, the 10-bagger. I don't think it's the time to buy it just yet at the moment. CRR, if you're in that, had it on 9 cents 2 weeks ago, hold it. Again, more drill results, more strong drill results. I'd definitely still be holding it. ASX, just having a look at this, it's actually had a lot of support around around that 70 cents. They provided an update in their AGM, and this said guidance is on track. Now, but they did talk about inflation like everyone else. So listen, you shouldn't be in this. It's broken trend. But if you are in it, I'll tell you what, if it breaks 70, get out of it. It doesn't look very good. Bubs, very interesting. Some possibly joint venture in China. But I wouldn't buy it because look at the price action. This company's had great news in America and wanted to use their baby formula. But look, all the good news. Look at the share price, below trend, just not doing anything. It's just too hard. Also in the news, Fastbricks. So Fastbricks is this automated machine that built, like robot that builds houses, and you can see Brickworks. I've got bought into about 11% of it. There was a story in the AFR today that are Brickworks interested in buying it. Now I'm still waiting. They're in a trading halt. Possibly there still could be something coming there. If there isn't something coming there, they're most probably they could be just coming out to say, well, there's nothing in that story at all. But you could understand Brickworks why they would be interested in fast bricks. Obviously, a robot that can build houses could actually quite really go well with their business model, and maybe fast bricks needs a big company like Brickworks to say, right, we like your idea, it's in the infancy, let's really turn that into something special. Um, I think that's all I've got to talk about at the moment on Equity Story. Excuse me. What I would say is I like this idea of easing into dividend plays over this period of time over the next 6 months for those long-term investors. There's 5 stories I've given you in America. I think COF here, JB Hi-Fi, and again, have a look at those ones that Wolfie's got on our dividend portfolio on the website. Um, you know, opportunity knocks, and this could be one of them in the dividend plays over the next 6 months. Um, on that note, just like to say, I was trending. I did put it on Einstein's. I thought, Dave, you've got to look at these stocks. Why wouldn't you buy that? New Hope Coal, if you're in it, hold it. Price action this week, very good after the Monday sell-off. And Macquarie have come out with a $7 target price on it. So, it just shows, doesn't it? Buying the momentum is still paying off in a really, really, really tough market. And again, coal, just one of those little special areas, as well as lithium, that's still kicking, still making some money for us, hopefully. On that note, have a wonderful day, and hope you enjoyed what we did last night with Claude, and obviously look forward to getting Claude back on the next Ask the Analyst Live. Thank you very much, and speak to you soon. Bye bye.